GM, it's Blake here. As always, none of this is financial advice. Trade and invest at your own risk. This video is for entertainment and educational purposes only. Let's go ahead and get it started. We have the S&P pulled up here on a daily time frame, and those of you that follow me know we are in a downtrend and currently bear flagging below the cloud. So the cloud is the 10 and the 50-day moving average. We've got 6 trading days closing below this cloud. So this is technically a bear flag below the cloud, which is a bearish setup. This is the last trading week of the year, so not expecting a whole lot of action. I think we can pretty much pack it up for this year and look towards 2023. So this has been, a down year. So I think, heading into 2023, we need to come at it with fresh eyes and open for, new trends to develop. So on the weekly and the higher time frame, still, weekly is technically in a downtrend, and the monthly as well, not looking great, getting rejected at that 10-period month moving average. We're still in a downtrend on the higher time frames and also on the daily. So yeah, it's really difficult to get aggressively long or even look for long setups when, things seem to be trending lower and lower. So for this week, we're not really going to be, trying to figure out the next move in this market. We've had a pretty violent down move from CPI data back in mid-December, along with the Fed decision a couple days after. So that, caused a pretty sharp move lower. And yeah, we're just kind of chopping around since then. No real follow through, no real momentum. But like I said, the higher time frame still suggests lower prices. I think that this market probably does want to, come back and retest some of these levels. 365 maybe would be a target I'd be looking for SPY early this next year. The NASDAQ has been relatively weak, and we've actually have a hedge on with our investment portfolio, pretty significant size actually, with PSQ, which is just the inverse NASDAQ. Yeah, and the reason why we chose NASDAQ is we want to be with relative weakness. If we're technically shorting the market, we want to be short whatever is showing the most amount of weakness, and lately that's been tech. Not what I love to see, but it is what it is. When we start to see a new trend develop to the upside, I'm definitely going to be looking for the Dow Jones and industrials to lead once again. You can see the Dow is still holding the bottom of this cloud, the 50-period moving average. And, I don't think the market can go really any lower unless this Dow takes out these lows here. Unless the Dow takes out the December 19 lows and we confirm price weakness confirmation below these lows, then I think the market has a much heavier, leg lower than expected. But as long as we hold this 325 area on DIA, I think we're definitely, potentially setting up for a possible bounce into next year. So keep an open mind. We're going to be really watching the Dow Jones. If the Dow Jones holds this and gets back above the cloud, yeah, if the Dow Jones gets back above, well, we'll call it, 335 for DIA, above 335, I think we could potentially take a look at some longs in the industrials. Below 325, yeah, all bets are off. I think this market wants to go much lower. So, if you're trying to figure out where this market's headed, I think keeping a close eye on the Dow Jones is probably going to be your earliest signal to give you a direction as to if this market wants to head higher or if it wants to head lower. So, the S&P easily could come and fill some gaps up here. You can see, relatively speaking, the Dow Jones is still relatively stronger than the other indexes. So pay attention to the Dow Jones, all right? And one of the things that's really, fueling the Dow Jones is energy again, okay? So we said, hey, it broke below our cloud, it just puked it out. Now it looks to be setting up to be some sort of double bottom here. And now, yeah, we are technically in an uptrend on the daily time frame in XLE. And if we can get back above this, call it 88, I think we're going to be going right back to new all-time highs. Well, not all-time highs, but new 52-week highs on XLE. So this could end up in our investment portfolio very soon. So keep a close eye on XLE and what we're going to be doing with our investment portfolio. One other thing I want to cover is XLV. So healthcare, also held in our investment account. So one of the things I want to highlight here is this 618 fib retracement. So from the highs back in, April to the lows from the summer, the 618 fib retracement is right around 134. You can see it was an area of interest before we broke out. We broke out and then came in right back and tested that again. So as long as this holds, I still think this has probably got another leg higher. So keep an eye on XLV. I'm trying to be patient with this one. Still showing relative strength, generally speaking, so don't want to puke it out just yet. And then lastly, our other hedge is silver. So silver, still looking strong. Definitely extended here. I wouldn't be surprised if we start to consolidate, especially you can see this this gap up here, which we did fill. And it's what you would expect, slowing down when we coming into a gap, we're catching support, where we would at trend support, the top of the cloud. So nothing too intriguing here. Looks like pretty normal price structure. I do prefer silver over gold. It is relatively stronger. Take a look at gold. One thing to note is the 200-day moving average. And we closed above it. So we've had some multiple days closing above the 200-day moving average. We're above the 0.382 fib retracement. So this is a great spot, in my opinion, for gold to really, get some solid footing and make some moves higher. So if that happens, I do suspect silver will do the same thing. Obviously, silver is relatively stronger than gold. So I would expect that to happen as well. Let's wrap it up with crypto. So Bitcoin, let's take away this 200-day moving average. Bitcoin, look, still doesn't look great, right? We haven't really gone anywhere for a couple months now. I think this is also, very heavily tied to equity markets still. So it's still tied to what the stocks do. But crypto doesn't look great. It doesn't look like it looks like it could, flip a switch at any moment. So don't really have too much to say about crypto this week other than the fact that I'm a big believer in it long term. I think these are fine levels to accumulate. Just to wrap up, S&P, bear flagging below the cloud. This week, don't be too aggressive. I think it's definitely time to start looking for 2023, how to approach this market. And then, with our investment portfolio, we're going to continue to follow relative strength, relative weakness, and be positioned accordingly with what this market throws at us. So I will see you guys next week. Take care.